Ever feel like no matter how hard you work, your bank account never seems to grow? You're making $20 an hour, putting in all those hours, but somehow the money's gone before you know it. Bills, unexpected expenses, and suddenly you're back to square one. Sound familiar? You're not alone, and it's time to break that cycle. What if there's a simple way to take control of your money and make it work for you? Don't miss any of the steps I'm about to reveal. They could be the key to transforming your financial future. This simple budgeting method can revolutionize the way you handle money, giving you control and peace of mind. Every step we're about to cover is crucial, so stick around, especially for tip number 4, which could completely change your financial game. Imagine not having to stress about unexpected expenses or feeling guilty about treating yourself. Sounds amazing, right? Well, it's possible, and I'm going to show you how. First, let's calculate your monthly net income. Many of us believe we know how much we earn, but often overlook taxes, insurance, and other deductions. This leads to overspending because we're budgeting based on gross income, not what actually hits our bank account. The result? Overdraft fees, mounting credit card debt, and that sinking feeling when you realize you're short on cash. So, the first step is to calculate your actual take-home pay, your net income. If you're earning $20 an hour and working full-time at 40 hours a week, that's $800 before taxes. After deductions like taxes, Social Security, healthcare, and any benefits, your net pay might be closer to $650 per week. Think of it like planning a road trip without knowing how much gas you have. You wouldn't get far, right? Similarly, you need to know exactly how much money you have to plan your financial journey effectively. Grab your latest pay stubs. Yes, all of them if you get paid weekly or bi-weekly. Calculate your average net income per month. This might take a few minutes, but don't skip this step. It's the foundation for your entire budget. Next, apply the 50/30/20 rule to your income. Without a clear budgeting framework, it's easy to let expenses spiral out of control. You might find yourself splurging on things you want while neglecting savings or even essential bills. This can lead to financial stress, debt, and a feeling of being trapped. Enter the 50/30/20 rule, a straightforward budgeting method that allocates your net income into 3 categories: 50% for needs, 30% for wants, and 20% for savings and debt repayment. Think of your income as a pie cut into slices. By predefining how big each slice is, you ensure you have enough to enjoy now while also saving for the future. Take your monthly net income, let's say it's $2,600, and allocate $1,300 to needs, $780 to wants, and $520 to savings and debt repayment. Adjust these numbers based on your actual income. Missing this step could derail your financial goals, so don't overlook it. Applying this rule is the backbone of your budgeting plan. Skipping it could mean the difference between financial peace and financial chaos. Now, identify and prioritize your needs. One common mistake is confusing wants with needs. This can lead to overspending on non-essentials, leaving you short on cash for important bills like rent or utilities. The stress of choosing between paying a bill and buying groceries is a situation no one wants to be in. Clearly define what constitutes a need in your budget. Needs are expenses you must pay to live and work: housing, utilities, transportation, groceries, insurance, and minimum loan payments. Think of needs as the foundation of a house. Without a solid foundation, the entire structure is at risk. Ensuring your needs are covered keeps your financial house standing strong. List all your monthly essential expenses. Be honest and thorough. Then, make sure these expenses fit within the 50% allocation. If they don't, it might be time to look for ways to reduce costs, like downsizing your living space or finding more affordable transportation. Don't overlook this step. It keeps your financial house stable. Identifying your needs accurately ensures you don't overspend in this category, which is essential for the 50/30/20 rule to work effectively. Then, manage your wants wisely. It's easy to justify spending on wants, especially when you've had a tough week or feel you deserve it. But without limits, these expenses can eat into your savings and even your ability to cover needs. Limit your spending on wants to 30% of your net income. Wants include dining out, entertainment, hobbies, vacations, and that daily latte from your favorite coffee shop. Think of wants as the icing on the cake. It's sweet and enjoyable, but too much can be unhealthy. Keeping it in moderation ensures you enjoy life without compromising your financial health. Prioritize your wants by listing them out and ranking them based on how much joy or value they bring you. Allocate your 30% budget accordingly. Maybe you can cut back on streaming services you rarely use or limit dining out to once a week. Missing this step might lead to unnecessary debt and stress. Balancing your wants is key to enjoying life now while still preparing for the future. Don't skip this. It's about living well within your means. Up next, automate your savings and debt repayment. Don't miss this. Saving money can feel challenging, especially when it's left to the last minute. It's easy to forget or justify skipping a month, but this can delay your financial goals significantly. Set up automatic transfers for the 20% allocated to savings and debt repayment. This ensures that a portion of your income goes directly towards building your future without you having to think about it. Automating savings is like planting seeds that grow into a forest over time. You might not see significant growth immediately, but with patience, you'll have something substantial. Contact your bank or use your online banking app to set up automatic transfers to a savings account or to make extra payments on your debts. Schedule it to coincide with your payday so the money is transferred before you have a chance to spend it. This step is a game changer. You don't want to overlook it. Automating your savings and debt repayment makes financial discipline easier. Skipping this could mean the difference between reaching your goals and falling short. Now, here's a bonus tip. Regularly review and adjust your budget. Life is full of changes, raises, new expenses, or unexpected bills. If you don't adjust your budget accordingly, you might find yourself off track. Set aside time each month to review your budget. Look at where you succeeded and where you might have slipped. Adjust your allocations if necessary. Think of your budget as a living document, like a garden that needs regular tending to thrive. Mark a date on your calendar each month for a budget review. Use this time to celebrate your successes and plan for any upcoming expenses. This could be the key to unlocking even more savings. Regular reviews keep you accountable and proactive. Missing this step could cause small issues to snowball into big financial problems. By calculating your net income, applying the 50/30/20 rule, distinguishing between needs and wants, automating your savings, and regularly reviewing your budget, you're setting yourself up for financial success. Remember, each step builds upon the last, and skipping any could keep you stuck in the paycheck-to-paycheck cycle. If you missed any part, feel free to rewind and catch up. Every detail is designed to help you take control of your finances. Now, I want to hear from you. What's the first step you're going to take to improve your finances? Are you going to calculate your net income, or maybe set up that automatic savings transfer? Let me know in the comments below. I'd love to hear your plans. And if you're ready for more tips, make sure you check out our other videos on personal savings, budgeting, and financial literacy. Don't forget to subscribe and hit that notification bell so you don't miss out on any future content. Remember, taking control of your finances is a journey, and every step counts. Don't miss out on the financial freedom you deserve. Thanks for watching, and I'll see you in the next video.